So this is an extremely important video because in this video I'm going to talk about swing trading. Okay. Everybody is excited about swing trading. Everybody wants to do swing trading because people feel that there is quick money in swing trading. But my dear friend, the market is not there to give you money. The market is there to take your money. Let me repeat that. The market is not there to give you money. The market is there to take your money because you yourself are the market. Do you go to the market to give your money to someone? No, right? You go to the market to take money from the market, right? So remember that there is no quick money in the market, there is no easy money in the market. Profits in the market are not guaranteed, losses in the market are definitely guaranteed. Okay, remember that. Coming back to swing trading. What is the difference between swing trading and positional trading? Well, in swing trading, we are trying to capture double digit return in 2 to 4 weeks. That's our goal in swing trading. In positional trading, there is no specific return target as such because we are trying to capture as much gains as possible as long as the stock continues to remain above the 50-day simple moving average. Okay. So when you buy a stock, it could continue to be above the simple moving average for 6 months, 1 year, 1.5 years, etc. Okay. So swing trading and positional trading are two different things. Moreover, in swing trading, we give less weightage to fundamentals because we are trying to capture that momentum in stocks. Sometimes what happens is even a stock that is fundamentally not ideal, the stock can go up because there is upward momentum in the market. Now the question is when to do swing trading and when not to do swing trading. Okay. So if you look at market conditions, these are the four market conditions. In a downtrend, first let's talk about positional trading. In a downtrend, we are not supposed to take a positional trade. We should 50 to 75% of our portfolio should be in cash in a downtrend, and even the remaining 20 25% of our portfolio which is invested in the market should be in stocks where we are already sitting on a gain and our stop loss is at break even. And by the way, are you taking notes when I am speaking? You have to watch this video minimum 3 times to understand what I'm saying. Okay. And you have to take notes. If you do not take notes, you will forget about what I am saying right now. Okay. Whatever I am sharing with you, this is extremely valuable information. So you better take notes, pause the video, better take notes. Okay. So positional trading in a downtrend, 50 to 75% of your portfolio should be in cash. Remaining amount of portfolio which is invested should be in stocks where you are already sitting on a gain or where the stop is already moved to break even. In a confirmed uptrend, we are only supposed to look at stocks which are fundamentally strong, which may or may not be technically strong. That's positional trading. In uptrend under pressure, we are supposed to look at stocks that are fundamentally and technically strong and a normal position size. In a rally attempt, we are supposed to look at stocks which are fundamentally and technically strong, but we go in with a less than normal position size, maybe half position size. So that is the difference. This is how you do positional trading in different market conditions. Now let's come to swing trading. What is our goal? Our goal is to capture the upward momentum. Quick double digit return like 10 to 20% return in 2 to 4 weeks. That's the ideal swing trade. Okay. Obviously, in a downtrend, you wouldn't want to take a swing trade because the market is going down. So when you buy a stock, you want the stock to go up. You are trying to capture the upward momentum. So in a downtrend, there is no momentum. In an uptrend under pressure and rally attempt, where is the momentum? The momentum is under pressure. In a rally attempt, the market is already down around 5 to 10% from the peak. So where is the momentum? So even if you take a swing trade in these two market conditions, you should go in with a small position size. So then confirmed uptrend is the only market condition where which is ideal for swing trading because there is upward momentum in the market. You can capture that quick double digit return in a very short period of time, 2 to 4 weeks. So in my opinion, in my personal experience, This confirmed uptrend is the ideal scenario to do swing trading. When the market is in these three states, what is the need to do swing trading? We can just relax and wait for the market to come into a confirmed uptrend, right? Let me give you an example. You remember one trade that I took in Chennai Petroleum back in July? I had made a video on that as well. Now, I will not go back to that video. You can check it on my YouTube channel. You can go to my YouTube channel. When you go to my YouTube channel, there is this little search button. You go here, you write Chennai, okay? See, you'll find this video 16.27%, and this was made 5 months ago. So, somewhere around July, I had bought the stock. So, let's look at that stock. So, Chennai Petroleum, that's a swing trade because I closed the position in 2 days. So, have a look at this. This is the yellow line, this is the base. So, this was my entry day. So, 15th of July, I bought the stock. My position size, if I remember, it was 6.25%, must have been 6.25% because my target, which is the green line, was 16%. So I made a 16.27% gain from the yellow line. See, 17%. So 16.27% gain was made on this stock. I bought here and I sold on this green line. So buying price was 1069.25, somewhere very close to that because I cannot buy exactly at the yellow line. My price must have been 1070. And my selling price was exactly 1255.40 because I used a automatic order to exit the trade. And when I exit the trade, look what happened. In a single day, the stock collapsed 15%. So booking the gain here was the right decision. And see what happened after I sold here. The stock just collapsed. Right. So booking the gain here, this was the ideal time to book the gain in that stock. Now, why do I call this a swing trade? Why I don't call this positional trade? Well, the reason is simple. I just told you in swing trading, we don't give much weightage to the fundamentals. So if we go to the fundamentals of this stock was poor. Let's go to Chennai Petro. So Chennai Petroleum, if we see, so I click on consolidated. Now I bought the stock in July. So 15th of July. So probably June quarter earnings. I was probably looking at June quarter earnings or March quarter earnings. Let's look at June quarter earnings of 2024. Have a look at this. March minus 38%, June minus 36%. Have you ever found me buying a stock which is giving a negative EPS growth in the latest 3 quarters? Never, right? Then why did I take this trade? Well, the market was in a confirmed uptrend. So if you go here, if you scroll down from 11th June to 3rd of October, so 15 July falls in this date, okay, in this period, the market is in a confirmed uptrend. So there is more upward momentum in the stock. So during this time period, I got the opportunity to enter this stock. So when the market was in a confirmed uptrend, I took a chance. I took a 6.25% position. See, there is a mother baby candle, blue, green, red. I'm buying off the green zone. There are 4 points in the base. Everything that I need is here. So I took the trade in spite of the fact that the March quarter EPS growth is minus 38%. June is minus 36%. Sales, don't even look at sales. Okay. And by the way, what was the relative strength of the stock when I bought it? So this is 15th of July, right? So the relative strength, see in the second box, there are two boxes that open. In the second box, look at the last line. It is written RS81. So the relative strength of the line was close to 80, which is our ideal uh, relative strength. We want it to be 80 or more than 80. So you understand, if we can enter into higher relative strength stocks with in good industry, which are having a good industry group rank, even if the fundamentals are weak, we could still capture gains. And by the way, this was the ultimate top in the market, 1275 in Chennai Petroleum, and I ended up selling just 20 rupees below that ultimate top. So look at that for a timing. And why did I keep 16%? Why did I not keep 17%? Why did I not keep 20% target? Because 6.25% 6.25% multiplied by 16% is equal multiplied by 100 is equal to 1. So 1%, you make a 1% gain on your portfolio when your position size is 6.25% and when your target is 16% and your target gets hit. So 1% on a portfolio from a single stock in less than 2 days, it's a fabulous return. Okay, 1% on your portfolio in less than 2 days or 16% return in less than 2 days on a position size of 6.25% is a fabulous gain. Okay, so not only do you have to look at double digit gain in 2 to 4 weeks for a swing trade, here you are forget about 2 to 4 weeks, you are getting it in 2 days. So why not sell the stock? And by the way, I put that target on this day itself because the opening was very strong. Chances were very high that it would have gone up much higher. So I decided that 1% would be my 1% on portfolio would be my ultimate target. So I kept the target at 16%. You can watch the video to understand my thought process at that time 5 months ago. Okay. Now the question is you go to Nifty. Wait. Nifty, you go to July. Okay. Now look at July, 15th of July, when I actually bought the stock. See, this is 15th of July. See, blue, green, red. The market is in a proper confirmed uptrend. The price is above the all the three moving averages, and all the three moving averages are sloping up. So the point I'm trying to convey here is between June and October, the market was in a confirmed uptrend. Again, from 3rd January till today, that's 9th of January, the market is in a confirmed uptrend. What is the difference between this uptrend and this uptrend? Well, in this uptrend, let me draw a line here also. So check in during this uptrend, the price is above all the three moving averages. The 50 days above the 150 day, the 150 days above the 200 day. So it is not just the uptrend, it is also about the sustainability of the uptrend that matters, right? This uptrend was more sustainable because price, blue, green, red are aligned. But have a look at this. The green is above the blue is above the red, and the price is below all of the three moving averages. So tell me one thing, which uptrend is more sustainable, which uptrend is more reliable? Just because the market Smith says that this is a confirmed uptrend doesn't mean that you go and take a swing trade. So the argument I'm trying to make here is wait till the market goes into a confirmed uptrend before you decide that okay, now you want to start taking swing trades. Okay. If the market is in these three states, forget about swing trading. We don't even want to look at swing trading. Okay. Wait till the market comes in this green color. And then when it becomes green color, the second question you ask is how sustainable is that uptrend? That's where you look at moving averages. We need price, blue, green, red. We don't need green, blue, red, price. That is not sustainable, right? So two questions you have to ask before you take a swing trade. Is the overall market in a confirmed uptrend? General market index, the prominent index, is it in a confirmed uptrend? Number two, how likely is the confirmed uptrend is sustainable? Is it a sustainable confirmed uptrend? Now, there are ways to identify whether the uptrend is sustainable or not. For example, moving averages is one thing. Another method is you look at leading stocks. Are leading stocks leading the market? When the market is in a confirmed uptrend, and if leading stocks are falling, that is not a sustainable uptrend. That is not a time to take a swing trade. So those people who have not studied the market and who are excited about swing trades end up losing money because they have not understood the market conditions. They don't know when to take a swing trade and when not to take a swing trade. And by the way, out of 100% of the portfolio, let 80% of your portfolio be positional trades and the remaining 20% be swing trades. That way you will be trading safely. Okay. And by the way, if you are taking a swing trade during these two market conditions, make sure that you go in with a small position size because you are going against the headwind. You are facing the headwind. There is no tailwind. In confirmed uptrend, there is a tailwind, just like you saw in Chennai Petroleum stock. So just for 2 days, the stock went up, you capture the gain, and then the stock collapses. Look, the relative strength is 4. Here, the relative strength was 81. So tell me, Why not look at stocks with high relative strength? Correct? So this is what I wanted to convey. Now, I have not conveyed all of the information in a very systematic, structured way in a presentation or in a Word file. That is why I am telling you, please watch this video 2 or 3 times. And every time you listen to something that I said, which is worthy of taking notes, take notes. Okay? Because sometimes I might have repeated one thing twice. So keep pausing the video. Okay? Watch the video 2, 3 times and take the notes and then follow what I'm saying and then see whether it works for you or not. And whatever I'm saying is absolutely logical. I am not asking you to put a swing trade when the market conditions are in uptrend, under pressure, rally attempt down. This is common sense, right? So try it and tell me whether it works for you or not. Okay. Thank you so much.